So our main story today, decentralized financial markets. What are they? How do we feel about them? Are they the future? Now, these DeFi projects, for the most part, have walked away mostly unscathed from this year's economic storm. One could say that they are continuing to mature despite the crypto majors remaining relatively flat. We've covered in the last few weeks that some of the biggest market movers were DeFi projects, right? So one could argue that the DeFi use case might have a significantly greater impact on Ethereum than the 2017 ICO craze ever did. The DeFi industry's foundation is currently being built on Ethereum, which itself has secured its position as the number 2 cryptocurrency in general and as the leading standard blockchain for smart contracts, upon which DeFi is utilizing this for collateralized crypto borrowing and lending protocols. So it stands to reason that progressive adoption of the DeFi ecosystem would be very bullish for Ethereum as the main chain, because it's well positioned at the heart of this next generation of financial services. According to DeFi Pulse, the total value locked, or what they call TVL, into the DeFi markets is just shy of $1 billion. Now, back in March, when the COVID-related pandemic sparked what we will forever know as the March meltdown, DeFi took a big hit, with the TVL dropping to half of that number. But it has since made a 77% recovery, indicating that investors and enthusiasts haven't really backed down in the face of challenging market conditions or several high-profile hacks and exploits in recent months, which of course we have covered. Also a possibility here that just as we see retail traders piling into bankrupt companies like Hertz, we're just seeing retail crypto traders pile into the next biggest, newest thing, largely being uneducated and not knowing what's going to happen in the future. Time will tell. Now, TVL in USD is calculated by, of course, by taking the total balance of Ethereum that's locked up and the various ERC20 tokens locked up in DeFi smart contracts and multiplying them by their current price in dollars. And over the past year and a half, since the crypto market bottomed and the 2019 rally renewed our confidence in the space, DeFi has grown by almost 300% in terms of dollar value locked up as collateral. Naturally, TVL in USD will ebb and flow with current cryptocurrency prices. However, it's worth noting that DeFi has outpaced the growth of the overall total crypto market cap itself, which has only managed to appreciate 110% over that same time period. So you have a triple outperformance there. Now, in terms of Ethereum, which is the backbone of this emerging financial ecosystem, there are currently 2.5 million Ethereum tokens locked up, which represents only 2.25 of the entire supply. Keep in mind that does change every single minute. No fixed supply for Ethereum, nor will there ever be. The MakerDAO is the dominant force in DeFi, and that accounts for about half of the entire market share of the DeFi ecosystem, about 2 million Ethereum currently locked up in their protocols alone. Other popular DeFi platforms include Synthetix, Compound, Kyber Network, which in some cases are even distributing their own protocol tokens. And new DeFi projects are seemingly entering the space every week, but there is still this handful of popular ones that we know by name and by heart. By the end of May, DeFi had reached several new important milestones. This includes the number of new DeFi assets topping over 1,000 for the first time, and the number of users engaging in the ecosystem did reach a new all-time high of nearly 200,000 entities. Or as the CEO of the DeFi project Zerion recently observed on a chart he posted to Twitter, the growth in new DeFi assets per month appears to be growing exponentially. Indeed, if we look back to just over a year ago, Ethereum's primary use case seemed to be as a fundraising platform for ICOs of questionable quality. And that narrative began to collapse. And in its wake, the DeFi ecosystem sprouted up as the next killer app, the next killer use case. Now we fast forward to today, and we can see that Ethereum's foray into DeFi has been wildly successful, with the community continuing to deliver novel new protocols offering decentralized and trustless spot trading, money markets, margin trading, ETF style options, and even futures type contracts on the Ethereum platform. And it seems like DeFi developers have really let their imaginations run wild, dramatically pivoting Ethereum's use case in just under 2 years' time. From fundraising model to backbone of the new financial system. Fascinating. Now, another chart from Dune Analytics here shows the growth in the DeFi user base, which has almost doubled since the beginning of the year, with nearly 200,000 users currently on board. Now, Chris Berniski, don't sue me, bro, if I said that wrong. He's a partner at venture capital firm Placeholder. He points out in this tweet that DeFi will have a bigger impact on Ethereum than ICOs ever did during the 2017-2018 era, right? Or as he puts it here, quote, "The ICO boom flexed Ethereum's ability to perform one financial service, early stage capital formation. DeFi will flex Ethereum's ability to perform all financial services." Interesting. Now, initial coin offerings, of course, famously provided various crypto projects the ability to crowdfund themselves using Ethereum through token sales. And the ICO bubble ended up driving the price of Ethereum sky high, topped at 1,400 at the peak of the madness in January of 2018. Fortunately, most of us know how this story ended. Very few of those projects actually delivered. On top of that, there was a great deal of hype and greed and scams. Additionally, there was a great promise, there was a great hype around these promises of technology that would change the online world, which never materialized. We're all still using Google Chrome. Now, this explained the pump and dump scenario most of these altcoins experienced over a few months, from the fourth quarter of 2017 to the first quarter of 2018. And by mid-2018, failing crypto projects started to offload their Ethereum war chests, which resulted in Ethereum's price collapse of 94% that year. 2 years later, here we are in 2020. And the DeFi use case is shining fairly bright, and Ethereum's on-chain activity is higher than it has ever been before. Now, despite this impressive growth in DeFi, Ethereum has yet to put up a massive rally like it did in previous years. But some feel that this impressive growth under the surface is actually happening quite naturally without the unnecessary mania or FOMO buying, which inevitably backfired on investors in 2018. So, while Ethereum hasn't seen any major breakouts in its price and mostly tracks with the rest of the crypto market, it's possible that it is poised to perform very well over the next 2 years as Ethereum 2.0 rolls out and as that coalesces with the DeFi crown jewel to form the ultimate smart contract platform in the crypto space. At least that's certainly what they want to achieve. Now, DeFi, let's call him an expert, Ryan Sean Adams, in his latest edition of the Bankless newsletter, compared Ethereum to the stock market, describing traditional markets as pretending to be capital assets, and instead that they really have become savings accounts for the rich. Adams says stock prices are based on the actions undertaken by the Federal Reserve, and at the moment, they are being inflated by all the printing going on at the central bank. In this newsletter, he went on to describe how ICOs was DeFi 1.0, or the era of DeFi 1.0, but that era has since matured since crypto's Wild West period of rampant speculation. DeFi, in his opinion, is now considered to be its own financial ecosystem rather than a speculator's casino, as it is now setting its sights on delivering blockchain-based banking services such as lending, borrowing, saving, trading, investing, earning, governing, hedging, and even margin trading. And stocks, he argues, are pretty drunk at the moment, and the best capital assets of the 2020s won't be sold on the NASDAQ. They'll be sold on Uniswap. DeFi has certainly come a long way in the past couple of years, and it is only just beginning, potentially, right? Previous economic disasters overseen by central banks should have been a lesson to everybody, but we seem to be in the middle of another massive financial unraveling. And many in the crypto space feel the future of a stable financial system needs to be decentralized, and DeFi seems to be aiming to serve that function and bring to it as many people as possible. So, where do you guys stand on Ethereum and DeFi? Is crypto maturing thanks to Ethereum and well thought out financial use cases? Or do you think DeFi is just another buzzword like ICOs, attempting to draw in new interest to our space that will inevitably lead to another bubble as more and more projects fail to produce? Or will the rollout of Ethereum 2.0 together with DeFi begin to transform the crypto industry and legitimize this ecosystem as a next generation banking industry? Let us know in the comment section down below.